Welcome to the WorldWire Update. Don't forget to subscribe and click the bell icon for more updates and thrilling short scenes. The global energy map is shifting, and Canada is making a bold move. Ottawa has approved a major liquefied natural gas export hub in Newfoundland, a direct energy bridge to Europe. For years, Canada's energy was landlocked, serving mostly North America. This new Atlantic gateway changes everything. The facility is designed to supply Europe, which is urgently seeking to diversify away from Russian gas. Canada is stepping onto the transatlantic energy stage, aiming to become a key supplier to one of the world's largest energy markets. The Newfoundland hub leverages Canada's vast natural gas reserves and its geographic advantage, offering faster, more secure shipping to Europe than U.S. Gulf Coast terminals. This project signals Canada's ambition to become a global energy powerhouse, not just a regional player. The timing is crucial. Europe is prioritizing energy security and looking for stable, democratic partners. The Newfoundland LNG project is more than a commercial venture. It's a geopolitical statement, aligning Canada's interests with Europe's security needs. Canada is poised to capture a significant share of the European LNG market, reducing its dependence on the US and bypassing old export hurdles. For the first time, Canada will have a direct high-volume channel to global markets. This is Canada's declaration of energy independence, setting the stage for a new era in global energy competition. For years, the United States has dominated global LNG exports, thanks to the shale revolution and Gulf Coast terminals. US LNG has been vital for Europe, giving Washington economic and geopolitical clout. But Canada's Newfoundland project is a direct challenge. Tankers from Newfoundland reach Europe faster and cheaper than those from Texas or Louisiana. This new competition threatens America's energy edge in Europe. European buyers, wary of overdependence on any one supplier, now see Canada as a stable, democratic alternative. The result? Europe may split long-term contracts between US and Canadian suppliers, diluting America's dominance. The US risks seeing its market share plateau or decline as Canada ramps up exports. This rivalry forces the US to innovate, cut costs, and compete harder to maintain its position. The days of easy dominance are over. For the first time, America's energy crown is being seriously challenged by its closest ally. The transatlantic energy race is on, and the outcome will reshape global markets. The US must adapt or risk losing its leadership. The energy landscape is changing fast, and the competition is closer than ever. Pipeline construction is being revolutionized by new technology, making projects faster, safer, and more efficient. The global oil and gas pipeline market is booming, projected to more than double by 2030. High-grade steel alloys and automated welding boost capacity and safety, crucial for LNG and future fuels like hydrogen. Robotic welders and advanced testing ensure pipelines are flawless before they go online. Trenchless technologies like horizontal directional drilling let crews install pipelines under rivers and highways with minimal disruption. Digital tools optimize routes for safety, cost, and environmental impact. The industry is also preparing for the energy transition, developing pipelines for hydrogen, CO2, and ammonia. New materials like reinforced polyethylene offer corrosion resistance and flexibility. The US market for advanced pipes is growing, driven by the need to modernize aging infrastructure. As Canada and the US invest billions, these technologies will build the resilient energy networks of the future. The next generation of pipelines will be smarter, cleaner, and ready for whatever energy comes next. Competing globally means more than having resources. Canada's energy sector must be lean and efficient. Imperial Oil, one of Canada's largest energy firms, is leading a major restructuring to save $150 million annually by 2028. This includes a 20% workforce reduction and a $330 million one-time charge aiming for long-term efficiency. Despite cuts, production targets remain unchanged. Output stays high, costs drop. Imperial is leveraging ExxonMobil's technology and best practices, using data analytics and automation to optimize every stage. This trend is industry-wide. Canadian firms are streamlining to attract investment for big projects like the Newfoundland LNG hub. A more efficient sector is better positioned to win global capital and compete with international giants. The combination of internal overhaul and strategic export pivots gives Canada a powerful edge. Canada is building not just infrastructure, but a corporate sector ready to win on the world stage. Efficiency and innovation are now at the heart of Canada's energy strategy. Europe's reliance on Russian energy has become a glaring vulnerability, forcing a dramatic policy shift. The weaponization of energy has made security a top priority. Energy is now national sovereignty. Europe is urgently seeking new, reliable partners to avoid dependence on any single supplier. The US stepped in first, but Europe's needs are too vast for one supplier alone. Canada's entry is perfectly timed. A stable, democratic nation with vast reserves and a new Atlantic LNG hub. The Newfoundland facility is more than a business deal. It's a strategic lifeline for Europe. This aligns with the EU's push for a network of trusted energy partnerships. European governments are ready to invest in new infrastructure, creating opportunities for Canada. The global energy map is being redrawn by geopolitics as much as markets. Europe's quest for security is reshaping global trade routes and opening doors for new suppliers. The global energy market is in flux, driven by geopolitics, technology, and shifting demand. LNG facilities are expanding worldwide, with North America and Asia leading the charge. China's pipeline market is booming, reflecting its massive energy appetite. Major suppliers like the US and Canada must now balance between Europe's security-driven demand and Asia's high-growth markets. The market is moving from rigid, long-term contracts to flexible, dynamic trading. Spot markets and short-term deals are the new norm. Producers with the lowest costs and best logistics, like Canada's Atlantic projects, gain a real edge. The old order of a few dominant players is giving way to a fragmented, competitive marketplace. New entrants and disruptive tech are shaking up the industry. No single nation will dictate terms. Regional rivalries and partnerships will define the future. For consumers, this means more choice and better prices. For producers, it's a constant battle for market share in a rapidly changing world. Canada's entry into the transatlantic LNG trade is a game-changer for North America. For Canada, the Newfoundland pipeline unlocks natural gas reserves, creates jobs, and boosts government revenues. Securing a foothold in Europe means higher prices and a stronger economy. For the US, the picture is more complex. Canadian competition will pressure LNG prices and profit margins. US producers may face higher shipping costs and tougher competition, impacting future investments. Both countries must focus on efficiency and innovation to stay competitive. The US will need to modernize infrastructure and streamline regulations. Canadian firms must keep cutting costs and improving productivity. This rivalry could squeeze profits but strengthens North America's global energy position. Together, the US and Canada offer the world secure, reliable energy, a democratic counterweight to authoritarian suppliers. The challenge for the US is adapting to new competition. For Canada, it's flawless execution. The next decade will reveal how this tale of two fortunes reshapes the continent's energy landscape.